In this video, we'll explain two different ways to borrow money to start a business: loans from a bank and microloans. Sometimes after reviewing cost projections and adding up personal funds, entrepreneurs will see that they don't have enough money to cover costs. Bootstrapping a loan may not be an option. In that case, entrepreneurs will need to get help from investors. One way to do this is to borrow money from somebody else. Usually, entrepreneurs must pay this money back over time. Some entrepreneurs are able to borrow the funds that they need from family or friends. Others might need to borrow money from a bank. In other words, they need to ask a bank to loan them money. When somebody borrows money, we say they are going into debt. This option for covering business costs is called debt financing. Debt financing is covering business costs by borrowing money. In this video, we will review financing a business through loans, or debt financing. Remember, this means that money is borrowed and needs to be repaid or paid back. First, we will look at how loans work, and then we will compare two different kinds of loans: bank loans and microloans. Let's begin with a very simple example using Best Bicycle Delivery Service. Imagine that an entrepreneur is starting this business. The financial section of the business plan showed that the total startup costs are $200. Maybe the entrepreneur has $100 in personal funds to spend on startup costs. How much more seed money does the entrepreneur need? $100. The entrepreneur decides to ask for a loan from an investor. The entrepreneur needs to share the business plan and have an effective conversation to persuade the investor that the business has good chances for success in the future. Maybe the investor agrees to give the entrepreneur a $100 loan. This loan will have some requirements. First, the entrepreneur must pay interest. Interest is extra money that you must pay for borrowing money. Let's imagine that this loan has a 5% interest rate. That means that the entrepreneur must pay back the $100 borrowed plus 5%, or $5. The entrepreneur must pay back $105 total. Second, the entrepreneur has to pay back the loan within a time limit. Maybe the time limit for this loan is 1 year. Every month, the entrepreneur must pay some of the money to the investor until the total loan plus interest, $105, is paid by the end of 12 months.